Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we give a midweek update.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. The last time we spoke was last Wednesday, and SPY has gone through the motions since then, for sure, big time. Last time we talked, it was around 440, dipped all the way below 430, down to the 429s, heading all the way back up to 454 today, up another percent. You're seeing it go. The ranges on SPY are ridiculous right now. I mean, if you're day trading these, like how we just had Manziel talk about, I mean, the potential is huge.
Yeah, that's pretty much where my focus has been because the volatility has been awesome. I mean, even today, I was buying commons on SPY. Like, that's how much volatility, and I was making a pretty good buck. Literally just buying commons on SPY, which is wild. Usually SPY, if we got like a 1% move intraday, that was pretty great. We're seeing like 2, 3, 3.5% percentage point moves intraday with SPY, which is absolutely wild. So there's so much volatility out there, and I actually like doing this more than small caps because it's literally like playing small caps. Just in my opinion, the directions are much cleaner. So if you have the liquidity in the capital, I mean, it makes it great. It makes it great to be able to trade those things. And the one thing was that last year I would get chopped up a little bit on SPY. And the difference that I did this year was that I really truly let things work and I just scaled down my positions. So before I used to do like 5% of my account, 10% of my account into every single move. And now what I've been doing is like maybe 1 or 2% of my account, but I'm not really having a hard stop. I'm kind of letting it work more, and I've been using larger time frames. So, and I've been having huge success with it. So I've been doing 15-minute, 30-minute charts, so that it gives the play a chance to set up. So that if, let's just say 450 is my stop loss, let's call it, then I'm not just immediately getting out. If it hits 450, I'm seeing how it reacts on the 15-minute chart. So like today is Tuesday, February 1st, and I had to stop at like 448 or something. And it wicked underneath on the 5-minute chart, but on the 15-minute chart, it held there. So I held my calls, and the calls ended up going like 40%. So I've found that that's been really good because if you're noticing, the MMs are being really, really good about bringing things down, and they're stopping people out left and right. And I mean, accounts are getting chopped, and I understand that.
Yeah, we haven't talked about market makers in quite a while.
Yeah, but you're seeing these really crisp moves, and the volatility, although really good and tons of opportunity, if you're on the wrong side, it really sucks. So I've been doing it more like where I'm trying to capture more of a move using 1 or 2% of my account, using larger time frames and letting the move set up. So I'm not looking for like 1%. I'm looking for like 1.5%, 2%. I'm not looking for like that third. Like before, it used to be like I would go super heavy on a breakout, look for a third of a percentage gain, and then take that. Now I'm looking for like a 1.5% move, really high quality setups on support using the larger time frame so that I'm not stopped out and giving the MMs, my stop loss.
So last time we talked, we were kind of seeing SPY every day was just down and then another down. And if it ever was green, and it started to finally see some green days, the very next day, it'd pop up and then the next day it'd just fade off. You kind of do the call then put method, like just by the day. Now you're kind of seeing it back on track, hitting like 1% a day for going into last week, honestly. And what do you kind of expect for, to continue on SPY?
So I think that we should probably stay in a range. I think we're going to be inside a low volume, or actually not a low volume. I think we're going to be inside this like kind of stair-stepping range chop for a little bit. And what I mean by that is that if we think of the normal stair-stepping graph, it's where we go up and then we kind of consolidate and then go up again and then consolidate. And what I think more is going to happen is that we get into a range like we're seeing now. And I mean, it's going to wick like up 2% below the bottom of the range on the daily chart and then wick back up. And then it's going to test resistance and then wick all over the place. So I think volatility is here to stay for 2 or 3 months. But as I was saying, was that I think it's one of those things where we might see range and then break out to the upside and then like what we think is going to fail. And then it just holds the support again on like the daily chart. And that's why I've been using those larger time frames, because I think it's important. Because right now, if you were just looking at like the 1 minute chart on SPY for like the past like 20 days, I mean, it's all over the place. It's wild. And so that's why I've been using these like larger time frames, because I think what's happening is that we are going to see 500, I believe, before June. But that being said, I think before I thought there would be like a hard bounce back. And although we got that 4% from like 4% down to green that one day, that was almost like the bounce back that I was looking for. But because we were down so much intraday, it kind of ruined, like that like hard bounce back, if that makes sense. I think that was like last Friday, 2 Fridays ago. So now what I believe, or how I'm positioning myself, is that I'm positioning myself long inside the bio sector, and I'm positioning myself to where volatility is going to stay, and where it's going to be, like I said, like that stair step choppy, I'm going to call it. Where like we'll be inside a range for maybe 2 weeks, and then we break out, and then it's like where maybe we wick down, but then we wick back up on the daily, or even on the weekly. And then it's going to be like where we're all over the place. But then if you kind of when we look back on it, I think it's going to be really methodical, really controlled movement. Right now, everything seems super volatile and like all over the place. But if you zoom out on those larger time frames, everything is so controlled. I mean, literally, MMs are bringing it down to like certain prices, wicking it a percentage point under, stopping everybody out, and then you're seeing a massive candle to the upside, or the other way around, to where it's like, you think that, it's looking toppy, and then all of a sudden we're breaking resistance and it wicks up through the resistance, and then it's getting smoked and it's puking out later. And I'm not talking like just a little puke. I'm talking like, you think it's breaking resistance, like it's breaking out, and then, next thing you know, it's down a percent or two. I mean, futures alone, you can see it. Yesterday, so today's the 1st, Tuesday the 1st, I was watching futures last night. I went to bed at like 11 Eastern time. Futures were down 0.5%. I come back at like 3 a.m. and they're up like 0.7%. That's wild. Those are some crazy moves. So I think volatility, like I said, to recap, I think volatility is here to stay. That's how I'm positioning myself. I'm also positioning myself along the bio sector. And I think we're going to be inside I think we're going to be inside like a range, stair-stepping chop. And I still think that we see 500 by June. Now, I'm not like positioning myself for 500. Like, I'm not going to buy super out of the money calls, because I think that there's going to be so much chop. And right now, intraday, me personally, I'm doing really well trading the volatility So there's no point for me to risk like the premium decay on buying like 500, 5 months out of the money. Yeah, those get expensive. And then it's like the opportunity cost is tied up and stuff. And this is where, if you do learn to trade the volatility really well, which I think it's important, this is where you can make your year, or you can make like 6 months of your year. Historically, I'm a swing trader. I mean, you guys know me, like I'm historically a swing trader, but I've been making, I was down in January and I started trading the volatility and I made back all of January plus some inside like 2 days. And then now, it's been good. And as long as it stays, I'm all for it. And it's one of those things where like you got to be really careful with your risk, and have like those defined stop losses. But you got to zoom out on the bigger picture. I think that's like the biggest key takeaway that I learned from getting chopped up from SPY originally, was that I was going too heavy, and I was too focused on like the 1 minute and the 2 minute, the 1 minute and the 5 minute charts. Zoom out to the 15 minute, set those key levels, and that's what's been really working for me.
So one thing, that's kind of appeared to me, it seems like a lot of, people that recently started trading, let's say in the past couple years, they not exactly used this volatility. It was more of a swing trade or play the sympathies. For you personally, kind of two questions. One, what would you kind of suggest to swing and, sympathy traders to kind of get used to and get ready for this new market? And two, have you noticed anything from your swinging style of trading that you kind of take over to this style of trading that you're doing now?
Yeah. So the second part of that, the one thing with the swing trading is that I have conviction. Obviously, a big part of swing trading is having that conviction. So and I think that goes hand in hand with zooming out on these charts. Like I think that's my new thing, honestly, is going to say zooming out on the charts, because one of my biggest issues that I was noticing with my SPY was that I was getting chopped up, and sometimes, like right now, what I've been doing is that I noticed that my risk wasn't in check, meaning that I used too much of my account and I was going too close to expiration. Like I wasn't going like a month out, I was going like maybe 2 weeks out. So now I go like 6 weeks out sometimes, and the other thing was that I was getting stopped out immediately when it came down to that wick. So now what I've actually been doing is that I've been walking away from the computer. So I'll set price alerts at the key levels, and I'll go do laundry or something. Or like I'll just walk away and kind of like shut off my computer and go do something else. Or like call my mom, because because I don't want to look at the option, moving, 20% in between the range, but I have this overall thesis. So the way that I've found is that if I'm just hands off, and actually this was something that I was talking about with a friend of mine, was that one of the things that I don't think that I accounted for while in college was that college kept me busy. Like I wasn't able, when I would have classes on like, let's call it Monday and Wednesday, I wasn't able to look at my portfolio during class. So I couldn't look, so like I could intraday, if there was like a low volume sell off while I was taking a test, like I had no idea. So I wasn't able to like panic sell while I was taking a test.
Do you ever set like sell limits on some of these options? I know, like, because sometimes it just hits there for so quick. You try and get out, it's just like boom.
Oh,
and
yeah,
if you step away from your computer, I mean, you kind of have to in options, because those opportunities come and they can be gone quick.
Yeah. So I was talking to our friend Joy today about like where the range was or whatever, and then Verde, love Verde, love Joy, and Verde was like, yo, bro, like he knows that I like to get really big into shit, like, into options and like, and that I have conviction. He just sent me a quick message like, yo, like, relative volume super low. You see how tight SPY is, like, don't go nuts, like, going crazy at that 450 level. And the second they said that, I was like, damn, yeah. And that's why I love this community, because it's like Verde knows that I'd fucking love to go balls deep into shit. And he was, and he kept me in check. And so that was one of those times where like I walked away from the computer because I still had this overall thesis, but I set that sell limit just underneath that 450 level on SPY, so that I would get filled if there was a quick candle. And sure enough, there's a quick candle and that sold off. Now, obviously, end of day, it pumped and blew through resistance. But for those like 2 hours, I was like, Verde, like, thank you. Like the options sold off like a 30% from there. Like I just got filled, blah, blah. But yeah, so what I'll do is that I'll set the key levels and then I'll usually sell half at that resistance. So that's how like we always talk about trading around the core, and similar to swing trading, I trade around the core of the option plays. So in between the range, I'm trading around the core. So let's just say I have 50 contracts of SPY. I might add 50, and then if it goes down to support, I'll add another 30. And then when it goes back up, I'll sell 20 immediately, for profit. And then at the top of the resistance chart, I'll sell another 20, and then I'll hold 30 for some like parabolic move. And that's the way where I can kind of build up that profit intraday for that bigger thesis, so that if I do have that bigger thesis, so like I was saying, I don't usually typically try to use more than 1 or 2% of my account. And so if I'm using 2% of my account, immediately at that higher resistance, I'll scale out 1% of my account. And then I'll hold the rest for that bigger thesis, that bigger move where the options contract is going to go from like up 20% to like up 70, up 80, up 90. And that's what's worked for me. That doesn't necessarily mean that it'll work for everyone, but then like I said, is that sometimes it'll go back down to that support and I'll buy back what I just sold. And that's what's been working really great for me inside this range, especially with the decay of the options. And today alone, I watched like one of my SPY positions like decay like 10 or 15% like in front of my eyes, and SPY didn't even.
Yeah,
SPY
you have to
moved
have
like
those
2 hours.
conviction. Like conviction's such a big thing in options trading, because I mean that theta decay will just eat you alive.
Just eat you alive. So that's one of the ways I like to build in is trading around the core. And I don't think enough people really do that, especially because if you're trading SPY or something really expensive, you're only buying
you
like
probably
2 or
only
3.
have, if you have a smaller account, you may only have like 4 of them. So every time
Exactly.
the minimum you can scale out is 25%. And by the time it's up 50%, you're like, damn, I only have 1 left. And it's looking like it's going to gap up.
But that's where I think it comes so important to be like, keep yourself in check. And if you see that range, to take 25% off, because most of the time, especially right now with this high volatility, you're not seeing like SPY. Right now, you're seeing like a gap and go, low volatility melt up. But what we've seen recently is crazy moves. And so, and again, you can always add it back. Like you can always add it back. But the biggest thing that I've seen with myself is that I love to build the position earlier in the day. So like the 9 to 11 a.m. on SPY, I mean, I'll, when I say build a position, I mean like I like to build profits. So 9 to 11, I'll build up like a good base. I'll take profits like really quickly. I'll wait to buy on bottom of the range, and then I'll sell at top of the range. I'm building profits so that later in the day, and then I'll kind of let things simmer down and I'll let the options decay a little bit. And then when 2 o'clock rolls back around, that's when I'll look at the options that were trading like $4, and now they're trading at like $3.20, and things haven't even like moved, And so then that's when I'm like, it gets me excited, because then if I feel like an overall move is coming in the market because of this high volatility, that's when I'll start building a position, because again, I'm building it with profits already. So from the morning profits, I'm already there. Like even though I miss out on a good amount of profits by taking profits super early, I'm able to hold that conviction later in the day when I get back in, and that's how I'm able to have like these home run days. Like I think like I've had like a 7-figure week. So it's one of those things where I'm able to go for those home runs by building those smaller profits in the morning. And that's what I used to do back in the day, is that I would build up like $500,000 on like a $100,000 account. And then later in the day, that's when I would go, have some conviction. And I would say, okay, I'm either going to break even on the day today, or I'm going to make $7,000. Yeah. And that's how I would do. Yeah. And that's how I would do. Yeah, well, no. But I mean, like back in the day, that's how I would do like 6-7% on the account.
Gotcha.
Because I would say, okay, worst case scenario, I break even. Worst case scenario, I break even. Best case, or lose a little bit. Best case scenario, I make 5, 10, 15% on the account. And so that's what I've been trying to do, is be more aggressive. And like I said, in my experience with this higher volatility, it's worked great. But that being said, I did tweet today about MTSR because I am getting long the bio sector. The bio sector has been absolutely pummeled. Sorry, did you want to say anything about SPY before we moved on to the bio sector?
I just had, this was more in general. So you can go on the biosector, and then I kind of wanted to go over for, like, let's say some of the newer traders, that got chopped up in the past month and a half and that just couldn't let go of their bags, and they're starting to finally go up, and kind of advise them what to do. But we can go into the biosector now and then get to that after.
Okay, yeah. So as I said, is that basically obviously trading SPY and stuff like that, and then I'm getting long the bio sector. But the thing for me that is key is fundamentals. So I'm really big. Like I want to only pick the cream of the crop. Am I saying that right?
Cream of the crop, dude. Yeah.
Yeah. So I'm picking the cream of the crop because you can right now. I mean, XBI is down literally 50%, and then Ripster, my boy Ripster on Twitter, had a really interesting stat today, and I wanted to bring this up. So he tweeted XBI highest shorted ETF. Ortex, I've never heard of Ortex, but Ortex estimates biotech ETF to be 85% short as of today. Was 65% short January 14th. I mean, either way, 64% or 85%, it really doesn't matter. Both of them that's wild. Especially because everything's pulled back immensely. And we've talked about it on earlier podcasts that we know, like I know of funds, like really good bio funds that are down 30, 40% because everything's just been killed. So this is when I want to get super long, like the value names of the biotech firm. So biotech sector. And so what I mean by that is really good fundamentals, really good pipelines with already revenues. So I've bought XBI outright here, but I think that if growth has a bounce, the bios will bounce the hardest because they're the most speculative investment, and obviously growth is speculative. So when growth, kills it, bios kill it. When growth gets smoked, bios get smoked even worse. Think of their beta as being like 2.0. So for every point they move double. So the one that I talked about today was MTCR. That was the small cap bio that I've been getting long. My average is like 54 to 55, and they got a patent today. Now the patent's a little fluffy, but like great, like good for them. It's trading at 57 cents right now, and they have about $1.50, $1.60 cash per share. Now, yes, they are a bio and they are a growth, so they do have a large burn rate, but I'm playing this more as, like I said, is this
even if they have $1, are we getting some Hugh DD here?
Yeah, just a little something, because teaser. They got the patent. Yeah. Tim O'Connell put my, shout out to our boy Tim. He put my eyes on it when he was talking about it, and I like it for a few reasons. One, the cash per share. Now, even though they are going to burn a lot of cash, even if they burn 50% of that still puts the cash per share at 50% higher than where the stock is trading at right now. I'll take that any day of the week. Now, if we somehow get to $2 a share, that's a fucking home run. So this is one where I'm going to try and hold it. I'm going to try and hold it because I truly do believe that when bios snap back, they're going to snap back hard. I don't know if they'll snap back to all-time highs, but and I don't think they should, because I think bios are trading at such a premium that they shouldn't snap back to all-time highs. But them being down 70, 80%, yeah, I think that they can have a 50, 60% snapback because that'll still put them down 30, 40, 50, some of them 50% from all-time highs. So this is one that I'm really looking forward to, especially if the market starts to get smoked. Right now we're in earnings for obviously we saw Google have the 20-for-1 stock split. Amazon coming up on Thursday. Everybody wants them to do a stock split. So eyes are there. But if the market gets smoked again and we start to test that 430 level again, that's going to ensue panic. And I think people will flee to these small caps and will flee to growth. And
About
then
damn
that's
Tom.
yeah. And then that's when it just becomes a supply and demand thing. I didn't do enough DD to know if XBI truly is 85% short, but with that kind of short interest, it won't take much for that to be back over 100. Like that, like this is like where you're kind of like, this is kind of where like you kind of got to kind of play poker. Like MTCR, I'm okay with accumulating. I'm okay if it goes down to 45 cents. If you're not, stay out of the trade. But this is where I'm okay because I think that the snapback is going to be really, really hard, or not hard. I mean, like, I think the snapback will be vicious. Hard, baby. So I think the snapback will be vicious. And so I'm okay with accumulating on dips. Now, hey, listen, if it wants to run to 1 without any dips, yeah, fuck it, do it, baby. But this is one where I'm really excited about. It also has they filed for an IND, which is like I think 65% of all INDs get approval. So that should be coming by March 1st or March 15th, something like that. And so that's a catalyst. You guys know I love catalysts. So now they're trading below fundamentals. They have a catalyst. They're inside a sector that I like, that is beaten down. Like this is like the things that I look for, part of the matrix, things to check off on the box. Now again, their management did have 2 resignations. I don't say that as a big deal. Like it's we're not talking about like if Merck had their CEO and CFO leave, that's a pretty big red flag. But inside small caps, they kind of just
cleaning house, dude. Just shuffling around some people, man.
That's literally how it is. They just kind of shuffle around between different ones. So I'm not investing in MTCR, but I would love to not sell any before 1. I would love to get like an 80%er run. I would love to, get some IND news all at the same time as XBI is, maybe coming close to 100 right after big cap earnings. Like that's something that I look for. And so I like this company a lot. And so I'm getting long the biosector, but I'm not being stupid. Like I'm not getting longish long. All at once. This is methodical and we have to pick our spots, so MTCR is going to be the one. I'm not going to blow my load on the first one. MTCR, I got a nice chunk, but I can get double from here. Yeah. I can get double big. I can get double big, double from here. Yeah. I got like a single patty right now. I can put a double patty on her. And that's fine. And it'll still be, that's a big move, and that's okay. I'll get longish long, and so I'm okay with it. So that's one of the things where this is where you got to be ready. Where I'm going to expose myself to the sector, but we have to understand that the sector still has a lot of potential downside. Again, though, if you bought XBI in like 2017, you're literally neutral in the position, which is mind blowing. Like it feels like everything the past 2 years has gone up 5x. The XBI, the biotech ETF, if you bought that, in 2017, you were net neutral. That's pretty good risk to reward to me. And individually, like I said, I want to pick fundamental stocks. So speaking about this podcast, if you guys have, especially biotechs, good fundamentals, ideally a revenue generating pipeline, and maybe a partnership with like a bigger pharmaceutical, send them, comment below inside the tweet that we tweet underneath the PGR pod, and I'll take a look at a few because that's what I'm going to get long. Like that's what I'm looking for. You guys now know what I'm looking for. Good fundamentals, catalyst, beaten down, 60% down, things like that. That's all right. I think I've exhausted my point, but
yeah, catalyst, dude. So last but not least, like we were talking about, little Bagholder therapy session. A lot of people just they never let go of hope and they hold their bags, and let's say their bags are down 65%. They're finally starting to go up. Let's say now they're down to 50%. When do they let go of these bags? If they are, let's say they don't have a lot of confidence, but they just have like, hey, my buddy or someone on Twitter told me about this. This is down a lot. It's starting to go up again. Do I think it'll ever see my average or higher, or how do I handle this? So what do you suggest to those souls?
Yeah. So the first thing I like to cleanse myself sometimes. If I'm like bag holding a lot of things, sometimes you just got to have like that little one-on-one talk with the homies, and you just got to say, hey, listen, where am I just like praying and hoping? And those are the ones that you got to cut. So right now, I wouldn't, if anybody, swing trader, day trader, whatever, I wouldn't focus investor on more than 5 stocks, because right now the market's so volatile that you're going to need that cash. And so I would just trade around the core of those 5 stocks. Any more than that, and I think you're going to get yourself into a rut. Unless you're like doing like 2% of your account. It's
not May 2020 of anymore.
Yeah, exactly. And so I would focus on 5 stocks. And so if you're bag holding like 8 or 9 stocks and you really don't know, like, again, it comes back to the why. We had a whole episode on the why. Why are you holding this? What are you waiting for? You know, like, do you just, is this just something that you're just hoping goes up? Because if that's true, just cut it. I found that when I cut my bags, I literally feel the weight being lifted off my shoulders.
Not waking up and not being scared to open your investing app is a feeling that is amazing. Like hoping it's green. You wake up at an hour and a half before market open and you're down $2,000, $4,000. And then you're just making your money back from what your swings took from you. And I saw, the saying, it's you didn't lose money till you sell. And I saw it on Twitter. Someone said this creates so many bag holders, and that's true. You haven't lost any money till you sell, but do you know if you'll ever make money on it? It's one of those things that maybe you can make money with that somewhere else, though.
Yeah, exactly. So that is key. That is key. So it's the emotional side of it. And also, it's the fact that you can potentially make your money back. But the thing is that what are you going to have to go through emotionally? And remember, if your stock is down 50%, so let's just say you're long the stock at 10, it's at 5. It now has to go up 100% for you to recoup. But then what are you going to do? Let's say they buy more at 5 and it goes to 4. Now the stock's got to go. Like you're just digging yourself deeper. So my biggest piece of advice is to cut your bags. Even unless you truly, truly believe in the company. And even at that point, if you have a bag that bad, then you didn't manage your risk right. If a stock goes down 50% and you're like, this is the future, I'm sure of it, like my uncle's the CEO and I have insider information, like even at that point, if the stock is down 50%.
Maybe your uncle's a bullshitter.
Yeah. You got to manage your position correctly. And that's why, like, any day that a stock is, if the market's up 2% and like my swings are up 10, 15%, I'm cutting 30% of my position. Because I'm gonna want that later when I want to buy back lower, and so are you. So even if you're down 50% on your position and you still feel like this is a future, you should cut some of your position. Even if you feel like this is the very, very bottom, you should still cut some of your position, because if it goes down, at the very minimum, at least you can buy more at a lower price. But don't get yourself stuck in a situation where you blow your load and it goes down 20, 30, 40%, or maybe you're inside that situation now. And then, you have no more buying power, or your risk is way off and you have 30% of your account in it. Don't get stuck into that. Take this as a learning lesson. We've all been there. I mean, I've done that so many damn times. Hell, I did that with a company that claimed that they were creating the largest Chinese river port. And they didn't even create a river port. And I'm still sitting there like buying bags and bags and bags. I mean, I truly thought that was going to be like my career ender, like my retirement maker. I ended up losing 75% of my portfolio on the fucking thing. Like, because I just kept buying more and more and more and more. Like 6 months of my life was dedicated to this fucking stock. And it smoked me. And so after that, I said, okay, even if I believe the thing is the next Amazon, my risk is going to be in check. And that was what I need to go through. And so if you're like, this will be the end of my trading career, blah, 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 it was not. It's not. Will you have to maybe do some DoorDash on the weekends? Yeah, sure. But who the fuck cares? Do what me and Gary did. We both bartended at night and traded during the day. So we lived on our bartender salary and we traded during the day and we got better. Hell, Gary took $500 to like 10 mil. I mean, you don't need 10 mil. Take the $500 to like 100 grand. That's a lot of money. And then the next year, just do another 100%. You know, like that's one of those things where like once you get the momentum going, I believe that everything happens for a reason. And that you need to go through certain things. I needed that Salva short loss to keep my short risk in check. Now I almost guarantee you, not completely, but I guarantee you I'll never do that again. But I needed to do that, and I need to have that 7-figure loss to now have myself in check. So take it as a wake-up call and take it for what it is. Because if you never do it again, then it's going to be a blessing in 15 years. But if you just give up, then that's it. That's all it is.
You lost it for no reason. I think
you lost it for no reason.
The people that suck at controlling their emotions when trading, maybe if you lose a bunch of money on something new, it was your fault, maybe physically inflict pain on yourself. Because then you'll probably maybe stab yourself in the arm with a fork or something.
One of the questions I always get asked is like, how did you do it when you were losing for years? And part of it was the fact that like I didn't have real responsibilities. But the other part of it is that I had like that stubborn pride. And I think that's what you need. Like, that's what I think you need. Like, you need that stubborn pride to be like, okay, I fucking blow at this. I blew 75% of my account, but I'm not going to let that be it. Like, I'm not going to let the story end there. I'm not going to let the period end there. And I think that really helped me, was having that stubborn pride. And I think that if you're inside a situation where, and we've all been there, and honestly, I would be there. If I had started during COVID, I would have blown up. Because I had to go through the things that I went through, blowing up 60, 70% of my account, to then come back and to never do those things again. Like, I don't learn when I do well in the market. I just don't. Like, I don't. I learn my best when I fuck up. Like, I learned my best as a child when I told my mom, when I cursed at my mom. Guess what I never did after I got hit? I never cursed at my mom again. But like, that's one of those things where I'll never do that again. Same thing with the short side. Like, I'll never throw my entire account into options while inside the bathroom of AP Stats again. Why? Because it was down 20% in seconds. Like, I'll never do that again. So you have to go through those things. So if you're down 75, 80% right now, don't put the period on the chapter. Don't close the book. Because if you do, you're just going to be another schmuck who just closed the book on their trading career because they weren't good at it. Nobody's good at this game until they're good at it. You're literally born not good at trading. That's the whole point of this, is that you're not good at it. And then you learn to become good. You got to go through like this whole journey, and like you're literally becoming like a ninja, just a fucking ninja the market.
Yeah, you guys have played Assassin's Creed before.
Yeah. So have that stubborn pride. Take your bags, take the L, take a week off, and just look at the account, and then come back, have good risk management, and understand that this is going to be a slow journey back, but it will be worth it. Because once you get on that momentum ride and you have a 500% year, and then you have another 500% year, and then you have another 500% year, that's where you can take like $1,000 to like $100,000 in like 3 years. Like those are the situations where you can do that. Like I did it. Gary did it. Zach Morris did it. Dan did it. Like those are the situations where you can do that. You got to go through the slumps to then come out, learn good risk management, compound the gains, and then that's where you can go on like the 3-year roll. Remember, this is a skill that you can have forever. So if you can figure out how to make 10 grand in a year, and then you're able to scale that, you'll be able to learn how to make 100 grand. You'll be able to learn how to make 200 grand. So that's the biggest thing, is just getting over that hump of being profitable. Because once you have a 100% year, it's over. It's over. It's over. Especially inside the market. You miss the good market. Like if you're listening to this and you're just opening up a trading account, you miss the good market, which is terrible because you didn't get to compound your account inside the easiest trading months ever. The good part about it is that you won't create bad habits because you can't. Because if you do, you'll blow up. That's all.
Thanks, Coach. All right, well, that was another episode of Pennies Going in Raw. And also, Manscaped has some dope-ass new stuff. Got the shampoo and conditioner, and then the body spray and this like body wash. And,
have you used it yet?
Yeah.
I was gonna use it tonight.
Yeah, I got it. It's pretty good. So use code PGIR if you're interested in that. I don't know if it's for sale yet, but dope stuff. We'll see everyone on Sunday. Have a great rest of your trading week. Peace.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.